Good afternoon, ladies and gentlemen, and welcome to the Plant Healthcare Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you this presentation is being recorded. Before we begin, I'd now like to submit the following poll. I'd now like to hand over to Chris Richards, CEO, Jeff Hobby, CFO, and Jeff Tweedy, COO of Plant Healthcare. Good afternoon.
Thank you, Paul, and good afternoon, everybody. My name is Chris Richards. I'm CEO of Plant Healthcare. We're pleased to be presenting this update today following the publication of our 2020 trading statement this morning. Now, I'm joined this morning, as Paul has said, by Jeff Harvey and Jeff Tweedy from the Plant Healthcare headquarters in Raleigh, North Carolina. Jeff Harvey, would you like to say hello, just to test the volume?
Hello, Jeff Harvey. Thanks for everybody for attending.
Jeff Tweedy.
Good afternoon, Jeff Tweedy, COO, and thank you for attending. Looking forward to a good discussion.
Thank you very much. So without further ado, let's get on to the slides here. First, the executive summary. We are pleased with the progress of the company in 2020. Commercially, our revenue was $6.6 million, which, while it only represented 2% growth in US dollars on last year, it was 9% in constant currency. But more importantly, we had some influence from COVID-19, which held us back, and there was more than $1 million reduction in distributor inventory, which we would otherwise have sold. And this reflects very strong in-market sales growth in our key markets, which Jeff Tweedy will explain to you in a minute. Significantly for us, our commercial business was both EBITDA positive and cash generative in 2020, which is a very important strategic objective for us. Moving on to our new technology, our PreTech, our vaccines for plants, we made tremendous progress last year. We announced just at the turn of the year that PHC 279 is now registered in Brazil, and that means we're on track to launch the product in the second half of this year. In addition to that, we've made very strong progress in US product development, particularly since signing a joint development agreement with Wilbur Ellis. And again, Jeff Tweedy will take you through that in a little bit. From a financial point of view, we're very pleased that the group is progressively moving to cash positive, a cash burn of $2.7 million for the year as a whole, compared to $4.8 million in 2019, and we have cash reserves of $4.2 million. The other thing I would like to emphasize right from the beginning, and will come up from time to time in this presentation, is our outstanding ESG credentials. All of the products that we sell have low toxicity and no residues, and they've replaced traditional agrochemicals as the farming industry becomes more focused on sustainability. Plant Healthcare is well positioned to grow strongly in 2021, and we believe that the company as a whole is at an inflection point. So why do we believe that? As a summary on this next slide, what Plant Healthcare does is we are in the business of highly cost-effective biological products for farming. These provide excellent return on investments for growers, providing more yield and healthier plants. They're highly sustainable. And we're in a sector which is growing at more than 16% per annum, and we aim to match that over the medium term. Our core commercial product, Harpin Alpha Beta, has very strong revenue drivers of revenue growth, and this is a very good gross margin earner with average gross margins in excess of 70%. And as I mentioned earlier, our commercial business is now profitable and cash generative. When we go on to PreTech, the important advance of PreTech over Harpin Alpha Beta is these products are lower cost, higher potency, greater stability, and tremendous ease of use. So their potential in agriculture, we believe, is very large. And we've invested more than $20 million since we started down this track in 2012, and we're targeting very large markets which are today worth more than $5 billion. We're making great progress now with our first launch in 2021. And at the same time, we're doing all this as we move to cash positive and are entirely focused on driving our cash performance. So I'd like to pass to Jeff Hovey now to take you through the highlights of our financials from preliminary results, please. Jeff.
All right, thanks, Chris. As Chris mentioned, our revenue for 2020 was $6.6 million, or 2% over 2019 levels, and 9% in constant currency. We continue to make excellent progress in reducing in-market inventory as on-ground sales continue to be strong. We have very good visibility on on-ground sales from all of our major distributors, and this allows us to be able to show growth of in-market sales going forward in all of our core growth markets. As mentioned in the previous presentation, we didn't experience an effect of COVID in the first half. We did experience an effect in the second half, primarily in Mexico, where we were unable to increase prices in Mexico to compensate for the peso devaluation that occurred during the year. However, Mexico is our largest revenue center. It continues to be profitable and cash generative. Our cash burn reduced $2.1 million to $2.7 million. This decrease is due to improved working capital through increased collections and improved inventory management. And we also experienced lower cash operating expenses, which I'll talk about in a minute. We keep a close eye on cash, which was $4.2 million at the end of 2020, and we continue to maintain strict control over our expenses to minimize our cash burn. Looking at margin, our margin was the same as 2019. We did experience a cost increase from our Chinese supplier due to the tariffs between the U.S. and China, but we were able to maintain our margin due to increased Harpen sales in several of our core regions. As Chris mentioned, our Harpen margins globally are anywhere between 70 to 75%. Looking at cash operating expenses, our cash operating expenses decreased $300,000 to $7.1 million. This is despite increased spend in Brazil to support the growth in the sugarcane market, as well as increased spend towards the launch of 279. The commercial business achieved EBITDA and was cash generative, which is wonderful. Further details of our 2020 financial results will be included in our full year results, which are scheduled to be released in the second quarter of 2021.
Thank you, Jeff. Turning now to a quick summary from my point of view as CEO, the major achievements in 2020. As we mentioned already, for the commercial business to be EBITDA and cash positive for the first time is really important for us, and we intend to maintain that. And in just a moment, Jeff Tweedy will take you through the strong in-market growth trends in our key crops. As Jeff Hovey has pointed out, it's strategically really important now that we now are able to follow closely sales in market, which we were not able to do before. And thirdly, both the Jeffs have worked very hard over the last 2 years on working capital, and we've made substantial improvement in accounts receivables and inventory reductions, which has supported our cash burn reduction. In Pretec, I can't tell you how excited I am about this, the progress here. We submitted registration of PHC 279 just about 12 months ago. We expected that it could take 2 to 3 years, maybe longer. We got it done in 12 months. And that reflects the interest in biological products in Brazil as they seek to make the production, particularly of the soy crop, more sustainable. It's something which is very much criticized in international markets. So the Brazilians are committed to doing that. That creates a very favorable backdrop for us. Secondly, we have secured a low-cost source of PHC 279 for the launch in 2021, and we're working hard on long-term toll manufacturing arrangements, which we should be able to announce later this year. We signed the joint development agreement with Wilbur Ellis in the US for specialty crops, fruits and vegetables, and I'm extremely pleased by the progress that's making. Wilbur Ellis are great partners for us. they're very enthusiastic, and there's a high level of energy and commitment on both sides. And lastly, it's important to remember that we have a really, really strong intellectual portfolio, IP portfolio here, which represents a barrier to competitors. And our first pre-tech patents have now been granted in the US, and we have further patents in progress. And finally, COVID-19 has hit a lot of companies. We had our moments, but we have managed those. And one of them, for example, is that it's more difficult to promote new products in the field. But we have worked around that very largely, not entirely, but very largely. And delivering a substantial reduction in cash burn is absolutely essential for us. So we believe that overall we made outstanding progress last year towards a set of very ambitious goals. So I would now like to pass to Jeff Tweedy to take you through the commercial business, and Jeff is also going to take us through 3 slides on pre-tech today. Jeff.
Thank you, Chris. I want to cover really 3 important markets for us that are going to be the key for our driving our growth in our Harp and Alpha Beta business. And these are really important. We believe that we obtain certain market shares. It could be upwards of $25 million of sales with very high margins. The first is sugarcane. The Harpin technology has been performing very well. We continue to get yield increases of an average of 23% in sugarcane coming out of our 3rd year. And in 2020, our on-ground sales with customers grew 3x. So if you take the state of São Paulo has roughly 5 million hectares of sugarcane. We achieved almost a 1% market share, which I think is a very good benchmark for us. And we look forward to the continued growth in the coming season. One additional point that I'll make on our Brazil business is that we were successful in getting factoring in place, which is really important in Brazil and reflected in the working capital numbers that you saw from Jeff Hovey just a minute ago. Again, we believe that this is a significant market for us and could be upwards of a $17 million sales opportunity. Second is our corn market. This is one of the largest markets in the world, and we sell Harp and Alpha Beta as a seed treatment in this market. And we've seen really good growth and yield return for a grower the past 2 years. The average yield increase is anywhere from 5 to 8 bushels per acre. And our on-ground sales in 2020 were 2x of the prior year. So 2 years worth, that's really good growth. We expect with higher commodity prices now, corn was upwards of $5 earlier in the month for the 2021 growing season. We expect a very good uptake of our product. Growers are going to have money to spend, which is positive. And again, a 5% share of this market would be about a $5 million opportunity for our business. Lastly is our newest market. I'm really excited about it. Chris mentioned Wilbur Ellis. We have a couple of different agreements with them. First, we signed an agreement with Harp and Alpha Beta. They're our exclusive distributor in the specialty crop markets. That would be markets like grapes, almonds, tree nuts, and vines. Wilbur Ellis is a $4 billion distributor and very strong presence in these markets. And in 2021 will be our first launch into California. Harp and Alpha Beta have been sold in other areas outside of California, but we received registration in 2020. So this will be our first year of sales into grapes and almonds. We really see this as a great opportunity, and again, potentially a $5 million opportunity with strong support from Wilbur Ellis. Now let me turn to the next slide, and this is really focused on our pre-tech new technology. I'm very excited to be part of and getting more involved in the pre-tech and what we're doing as far as moving towards commercialized products. And let's start by talking how does pre-tech work? And it's a technology that stimulates the plant's own growth and defense systems. So Chris mentioned earlier kind of this ESG really fitting into good sustainability products. This is a great product for that. And as he mentioned, we expected a registration in Brazil that would take 2 years. We achieved that in just over 12 months. So that was a great achievement to the team and the products. They're environmentally friendly. They have no residues. They're very compatible with traditional agricultural practices and products, and the regulatory approvals have been quite fast, and also they're very inexpensive to make. The good thing about these products is that we can use existing manufacturing that's in place, so we do not have to go out and have our own manufacturing specialized, which keeps our capital costs down as we bring additional products to the market. So what do? They really deliver increased crop yield and quality, so depending on what crop they're applied to and which peptide. We have peptides that help with drought and disease that we have partners that are interested in. Very low toxicity, no residues, and the registrations are very quick to bring them to market. What are the benefits for the growers? Really, as we look at the Asian soy rust in Brazil, it's a $2 billion market. We're looking at improving disease control. That ultimately results in higher yields up to $75 per hectare for a grower. And it is a significant problem in Brazil and other countries in South America. The return on investment is 6x alone, and it's a huge market. It's $2.5 billion. So we look forward to playing that as the first biological seed treatment for Asian soy rust. And ultimately it helps growers reduce their chemicals that they use on their field. So lastly, let's just talk about what we've achieved. As Chris mentioned, we've been working on pre-tech since 2013. And our scientists have discovered over 1,000 peptides. From there, we've really refined those down to 6 that we took for further development and then 4 for field trial work. So in 2015, we began an extensive field trial work on PHC 279, which now has resulted in our first registration. It will be our first commercial product launched in the third quarter of 2021. Next, we were able to secure the IP. There's over 40 patents filed, and our first patents were granted this past year. So we've created a substantial barrier to entry for the new technology. Next, we've confirmed the efficacy. So again, 6 products tested, narrowed that to 4, and we've really been looking at multiple crops in the U.S., Brazil, and the European Union. So those will be our target markets as we bring the peptides to commercialization. Next would be the production scale-up. We've done a lot of the work with Penn State University in cooperation to begin from a lab to a pilot, and then we can hand it off to a large-scale manufacturing. We'll be ramping up that manufacturing later in 2021, and then submitting for those registrations. And then we will continue to work with new peptides to bring them to market with cooperation with Penn State University. And what's really nice is that because of you can use existing equipment, makes them very cost effective. We believe our margins will be as good as or better than our Harper Alpha Beta business today. And lastly, you have to have a license to sell it. And we were successful in achieving the Brazil registration, as Chris mentioned, in record time. And we are now in the preparing for plans to launch in the third quarter of 2021. And I just say I'm very excited. I think these are big markets that we're going to be entering into. We've got good agreements in place. We have Chris mentioned earlier, but we have a joint development agreement with Wilbur Ellis in the U.S. along with our Harper Alpha Beta. So they now have access to the peptides in our specialty market, and they'll be working with us to develop those, bring registrations, and then commercialize those products in the U.S. And with that, I'll turn it back to Chris.
Thank you, Jeff. Appreciate it. So our final slide here is how should you judge us going forward? What are the commitments we're making to you as investors for the next 12 to 18 months? First of all, on commercial, we need to generate growing and consistent profit and cash from the commercial business. Secondly, we need to accelerate product adoption so that we can deliver consistent sales ex-plant healthcare and not just point to changes in distributor inventory. Thirdly, we have a great handful now of relationships with major distributors, particularly in the US and Brazil. We don't aim to stop there. We are continuing to look at new geographies and new customer relationships to take us into new places and crops. On the Pretec side, clearly, we are now working hard on the branding of PHC 279 for soy, and then launching through a major distributor in the second half of 2021. So expect to see news about that. Now, when we come to launch the product this year, our plan is to achieve initial product adoption in key soy growing areas. You should not expect multi-million-dollar sales in year one. Product adoption takes time in this market, as, for example, we've seen with Harpin Alpha Beta. The critical thing is to get out there in the market, get lots of farmers trying it so that they say, hey, this really works. I want to use it on more of my land next year, and I'm going to tell all my neighbors to do the same thing. Next thing we've got to do is secure low-cost manufacturing source for the long term. We have it secure for the launch, but we need to finalize for the long term. And then we will be achieving registration of PHC 279 in the US, and we plan to submit this year for our next peptide, PHC 949, which we're really excited about. We believe in some ways it could be bigger than PHC 279 itself. And then we'll be planning multiple US launches with Wilbur Ellis and potentially other partners in the US in 2022-23. And at the group level, we plan to achieve cash positive as quickly as we can and generate sustainable profits thereafter. The other thing that we would like to work on is we believe that this is a highly fragmented industry with opportunities for consolidation, and we plan to talk more about that later on in the year. So that completes our presentation. You now have an excellent gallery of the team. I'm very proud to be supported by a first-class team here in plant healthcare. And now back to you, Paul.
That's great, thank you. Thank you, Chris. Thank you to the two Jeffs as well. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. And lastly, before I hand back to the team, I'd like to remind you that your feedback is important to the company. Immediately after the presentation is ended, you'll be redirected for the opportunity to provide feedback in order that the company better understand your views and expectations. And guys, I haven't given you sort of a huge amount of time since the end of the presentation just to have a glance at the Q&A, but perhaps I could hand back to you, Chris, if you could just have a scroll through the questions that we've had in. I know some of them are around a similar theme, but if you wouldn't mind just perhaps reading out the name of the submitter and just the question so everyone can hear it, that would be great.
Sure, absolutely. Thank you for that, Paul. And thank you, everybody, for the questions, of which there are quite a number. And we may not be able to answer all of them now, but we will answer others in writing if we can't get to them today. I'm going to take them in an order which almost the order in which they came. First, from Roger F., you asked the question, there was a company on AIM called Plant Impact, which was heavily involved in the Brazil soy market. It had to be taken over by Croda. What lessons, if any, have you learned from this company's experience? That's a really, really great question because I knew that company really well and I knew the individuals who ran it. It's interesting technology and very competent individuals. And I don't in any way wish to be critical of Plant Impact or its management, but I'd like to make 3 points. First of all, frankly, the technology is interesting, but not world-breaking. By comparison, Plant Healthcare's technology is much more revolutionary, much more powerful. But I think there were probably two major mistakes that they made. One was that they did not monitor adequately in-market sales. They made very large sales to one distributor, it was Bayer, and then the buyer simply didn't sell it. And they either weren't watching in-market sales or Bayer didn't tell them or something. And that meant that eventually Bayer turned around and said, hey guys, we simply can't take any more. And that's really what killed them. And the second thing I would pull out is that my recollection, Roger, is that Plant Impact in their last recorded year, something like 85% of their sales were with that one customer. And having diversification of the customer base is massively important. Now, we don't have enough customers yet, to be honest. That's one of the reasons we're working on diversifying our customer base. But we certainly don't have that level of concentration that Plant Impact had. So, Roger, actually, I'm going to take another of your questions, if I may, Roger F. What can you tell us? I'm going to ask Jeff Hovey, as CFO, to answer this one. What can you tell us about your financing arrangements with your banks and also the working capital requirements for your Brazil pre-tech product launch? Jeff, would you like to take that one?
I'm happy to do so. So the financing arrangements, the banks, is primarily in Brazil. I think we mentioned this previously that the payment terms in Brazil can be anywhere from 180 to 360 days. So getting factoring in place was pivotal to us. We were able to get well, I guess I would classify as a really good interest rate. We've been able to secure non-recourse loans. From the working capital requirements, probably looking anywhere from $500,000 to $1 million in working capital requirements to launch pre-tech in Brazil.
Thank you, Jeff. So if I'm going to pick out, if I may, if I can find it by scrolling up and down. Here we go. Douglas P., you asked the question, will Brexit have a significant impact on the company's operations in the UK? First of all, Douglas, the UK is not a large market for us. We do have an important relationship in the UK. We sell into potatoes. That was launched a couple of years ago and is growing nicely. We also sell into the amenity market, which is really interesting. It's a little-known fact. Perhaps we ought to put it out more. The majority of the championship golf courses and soccer fields in the UK are treated with harp-and-alpha beta to improve the quality of the grass. So that's really, really exciting and fun. To be honest, it's not a huge market, but it is exciting and fun. So Brexit has not really impacted those markets. COVID-19 did when golf and soccer stopped. Then that hit was a significant hit for us. But I guess the only other hit is that we were using the UK as a warehousing point. And frankly, it's become too complicated because of paperwork and things. So I'm afraid we had to close our warehousing in the UK. We now run it from Spain. That's a fairly common Brexit story, I think. So I would like to pick out now a question from Abby R, which is a really, really good penetrating question, where Abby says, great progress with pre-tech. For distributors to convince growers to use the product, what are the existing solutions available to growers and how materially does pre-tech differ? Now I'm going to have a go at this, and Jeff Tweedy, please jump in if you want to add to this, because you're going to have to sell this product. Essentially, the existing solutions, Brazilian soy growers use a lot of inputs, principally agricultural chemicals to control diseases and insects and weeds. They also use microbials to stimulate nitrogen production by the roots of the plant. And interestingly, in contrast to the US, they use a lot of advanced nutrition. And that's a really interesting market, which helps us in Brazil. So that's the sort of thing they're using at the moment. We, with PHC 279, our product is added to the seed as the farmer, before the farmer plants it, alongside some chemicals and some microbials and often some nutrition. And what we do is we make the plant stronger, we give it more resistance to disease, and that results in more yield. So we anticipate over time that farmers will be able to use less fungicides to control disease, and therefore they will transfer their investment from more toxic agrochemicals to less toxic biologicals, which makes a big impact. So the return on investment that we are offering is around yield, but we do think there is a sustainability benefit. So I think those are the two critical points. But again, I want to emphasize that we need to show these benefits in the field. Farmers are very conservative and they're very skeptical, and they need to learn from their own experience and their neighbors' experience. And our job as we launch this year is to get as many farmers as possible to try the product and see the tremendous results which we expect. And that is what will drive product adoption over time. Jeff Tweedy, do you want to build on that? Did I cover it?
Yep, I think that's great, Chris. I think the only build that I would make is in Brazil, PHC 279, it's a new use. So, over time, growers will likely use less fungicides. I think in the U.S., the things that we're looking at would be additive. Is the work that we're doing with Wilbur Ellis right now would be additive to their product line. So it could be enhancement of a generic fungicide, or they could be putting it with they might be putting a peptide, one of the peptides, to increase yield or quality with one of their other product lines. So kind of like a product line enhancement and differentiation. That's how they're looking at it. So I think it's got multiple applications depending on the use pattern. Chris mentioned PHC 949. I'm very excited about it. It is a peptide that works very well on nematodes. Nematodes is a huge issue in a number of crops, and the data that we have either as a seed treatment and foliar looks as good as some of the what I would call more traditional hard chemistries out there today. We have a lot of work to do for registration submission, but it could be a substitution as a biological, and I can tell you the Wilbur Ellis team seems to be very excited about that product.
Thanks, Jeff. It was interesting. I thought the question to be mainly about Brazil, and you were quite right. I think Abby's question was much wider than that. So thank you for that. Can I pick up another question here? And I'm conscious of time here, but there's some really great questions. Andrew J., you say, do you see any potential for sales of any products in Europe and Asia? And again, I'll start with that, and Jeff Tweedy, if you could maybe pick it up in a minute. Yes, absolutely we do. We already sell harpin alpha beta in significant quantities. I mentioned UK, but Spain, Portugal are bigger markets for us than the UK. And we also sell in South Africa. But we're only scratching the surface, frankly, in Europe. Europe is the largest market in the world for biological products. It's bigger than the US, much bigger than Brazil. So we need to play in Europe. Frankly, we've not played in Europe up to now because we've had to prioritize the use of our limited resources. But we would really, really like to seek registration for pre-tech products in Europe. And we believe that over the midterm, that will be a very important market for us. Bear in mind, it takes quite a time to get registration in Europe. Lastly, in Asia, yes, there are very important markets in Asia. We've had a quick look at Japan, and we would, again, when we have the resources, we will look at Japan. Interesting markets for fruits and vegetables there, and also China, where there is increasing interest in biological products. And finally, there is reasonable protection of intellectual property in China, which wasn't the case in the past. So as plant healthcare grows as a company, we will certainly look at those markets. Jeff, do you want to pick up on that?
Yeah, thanks, Chris. Yeah, I just on Europe, I mean, I think, our Spain, Portugal business is doing well. It's the biggest market for us in Europe. The UK is growing, and we've got a lot of interest in pre-tech coming into the UK or into the European market. As Chris mentioned, the timelines for registration are a bit longer, but I think we just completed an internal review of new projects, and so our European colleagues have presented quite a group of projects that we can go forward with. In Asia, the one thing I would add is we've done some work in rice in Thailand, which could be a market for us pretty soon. And we have a third party that's testing Harp and Alpha Beta for us in India. We don't have a presence in India today, and sugarcane is a very fragmented market in India versus Brazil. But the yield results, we wouldn't expect anything different. We get similar results in South Africa as we do Brazil. So we've kind of mirrored those testing protocols with that partner. It takes a year to 15 months to get results back, but we would expect probably in another 6 to 8 months we get pretty good data back from that. So there are other opportunities that we're looking at expanding that wouldn't necessarily require us to add additional people, at least on our side, but more relationships in some of these other regions.
Thank you, Jeff. Now I'm just going to take 2 more questions, if I may, and then we're going to have to pack up. First of all, Richard M., you ask the implications of Biden and the USA are Ray ESG and any implications Ray China. I'm not sure what implications in that sense the election of President Biden has, but ESG is a big issue for agriculture as well as for investors. Clearly, it's important for investors as well. But farming in general, I can tell you I take part and listen to a number of farming conferences. I'm a farmer myself. And the consistent pressure, not only in the UK, which you'll have heard about, but every country around the world to make farming more sustainable is only going to increase. Within the European Union as a whole, the Farm to Fork framework is estimated to decrease the agrochemical use by 40% over the next decade and a half. That's their target, at least. And what are farmers going to do? They're going to have to use biologicals products. So we are in the center of that. We offer exceptional benefits with our products, comparable to those, in many cases, of conventional chemicals. And we have just this superb sustainability profile. So I think that ESG agenda, as I say, not only for investors, but for the farming industry, is only going to get more important. And I think that provides a good backdrop for us. And the final question I would like to take, 2 or 3 people have asked it, but Richard M. is the one that I can immediately see on the screen. Are we likely to need another cash raise? If so, can you ensure that all shareholders will be able to participate? Clearly, I can't comment on that at the moment. We do have reasonable cash reserves. We prioritize our spend very, very carefully. And we make sure that we only spend money where we have to, and we attempt to optimize that spend. My commitment is that if we do have a fundraise, as we did in the last fundraise, we will make it available as we did before, probably through primary bid, which is a vehicle which has to which all shareholders have access. So that being said, Paul, can I hand back to you, please?
That's great. Thank you very much indeed, Chris. Thank you guys for addressing those questions you can from investors. And of course, the company will review all of the questions submitted by investors today and will publish answers on the Investor Meet Company platform. Chris, perhaps just if there is any final last words before we wrap up, just for investors at all.
Well, thank you very much for your time today. It's been quite a long session. I hope you found it interesting. We are very excited about 2021. We have our tails up as a team, as I hope you can feel from our side of the table on this presentation. We expect great things both from the commercial business and from Pretech as we go forward to our very first product launch later this year and further product launches next year. So thank you. I hope you'll come along for the ride.
That's great. Chris, Jeff, thank you very much for updating investors today. Could I ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback. If you've accessed this meeting via the website, the feedback page will appear in front of you. If you've accessed via the link sent to you in an email, you'll be asked to log in to submit your feedback. On behalf of Plant Healthcare PLC, we'd like to thank you very much for attending today. That concludes today's session. Thank you very much and good afternoon.
Thank you.
Thank you.